Global share markets had mixed results in October. Developed regions such as the US and Europe performed really strongly, while Australia and parts of Asia were relatively flat. October was actually a really exciting month for bond markets, as yields spiked in Australia following stronger than expected inflation data. However, globally, yield movements were somewhat more steady, which led to only minor losses for the month. We're about halfway through earnings season in the US, and once again, US profits continue to surprise to the upside. Of the companies that have reported so far, 82% have exceeded market expectations, which is a key reason why we saw the US outperform last month. Here in Australia, interest rate fears weighed down on share markets last week, which cancelled out the good month had by Aussie tech stocks and healthcare companies. We saw core inflation rise in both Australia and the US during the September periods. And whilst the US has been experiencing elevated inflation for some time now, it was actually the first time in 6 years that Australia's core inflation has been within the RBA's target range of 2 to 3%. Of course, most of the factors driving prices higher have related to COVID disruptions and temporary distortions between supply and demand, particularly for things like raw materials and energy in more recent times. Several economists have now brought forward their expectations of when we might first see that interest rate hike, with some tipping as early as this time next year. So what does this mean for investors? Well, traditionally the prospect of rising rates and higher inflation has been negative for share markets. But so long as company earnings growth remains strong and economic growth remains robust, share markets should continue their upwards trajectory in future periods.